It's a great time to talk about this because we're coming up pretty soon, a few weeks, the 17th anniversary of the Satoshi White Paper, the release of the Satoshi White Paper, October 31st, 2008, the beginning for the most part of this asset class, really an institutionally investable asset class roughly over the last 6-7 years. And now we have this new capital formation model. We have this new amazing thing, digital asset treasuries, DATs. I'm going to start, Sher, with you, because for those of you who were earlier, we saw an unnamed CFO of a major Bitcoin miner kind of bristle at the notion that his company would be a DAT. And I want to explore that a bit, because is it up to you to decide whether you're a DAT? So we'll start with, what is it? Do you consider yourself a DAT?
Honestly, I'm not trying to toe the same line. However, while I do agree that I think it's the markets that would determine how they see you, I think it's also important for the businesses themselves to have context of how they see themselves. So in fairness, I think while I see the point that you're trying to allude to, I think fundamentally, of course, it's important for businesses to know how they identify themselves, right? Okay. We believe that Bitcoin and Solana Treasury that we hold as part of our corporate reserve is an important aspect of our strategy. But does that really define who we are? I would say no. We are a Bitcoin miner. We have a core business which generates cash flows for us, which we have oversight on. And so that's the core business we're in. And then, of course, as part of our treasury, as an active corporate reserve, we want to hold on to what we consider as an extremely important aspect on our balance sheet, which is to hold these crypto assets, whether it's Solana or Bitcoin. So
not just hold, though. You want to create yield. You want to actively manage them, right?
Correct. Yes.
Okay. Okay. So we have two investors on the panel, and then we have a Bitcoin miner, and we have a former Bitcoin miner and current CEO of a DAT. Full disclosure, I'm on the board of directors of that DAT. And so I want to turn to our investors for a moment. So first of all, let's start with you, Patrick. How do you think about First of all, I want to ask, do you think he's a DAT? And then secondly, how do you think about investing in digital asset treasury firms?
Well, I would say any company that decides to make a meaningful investment in digital assets as a treasury management tool, which is a digital asset treasury, could be a DAT. But I think if you have an operating business that's as big or bigger than your digital asset treasury, then you're probably also an operating company. So it's not clearly defined. I mean, the term was, I think, our friend from Pantera came up with the term digital asset treasury company. I mean, MicroStrategy was a software company, and then they started buying Bitcoin with their treasury, and so over time, their Bitcoin became more important than their software business. But it's technically still a software company, right?
Technically, right. So Scott, first of all, congratulations on the relatively new role.
Thank you.
You've had a storied career in TradFi, but you switched over to crypto fairly early. You've been around the space
since 2016.
Close to a decade. Okay.
Yeah.
And now you're the president of Pantera, largely known to be one of, if not the go-to digital asset treasury, general crypto icon, but has been a leader on the digital asset treasury side. So I'm going to back off for a second and give you an easy question. How did we get here? How did we get to a point where 5 to 10% of all outstanding Bitcoin and Ethereum are owned by a type of company that's really only existed 2 years? What, more or less, right?
2 years, but the explosive growth has really just happened really over the course of the last 6 to 8 months, right? So my partner Cosmo Zhang is, I think, the individual who sort of coined digital asset treasury, and it really has been one of the thought leaders in the space in terms of helping to define what a DAT is, how these companies come to market, what the differentiation between a DAT strategy is versus a passive investment strategy. And I think, if we rewound back to April, DeFi Dev Corp was, the DAT that was coming to market that we were an early and sort of anchor investor in. I think at the time, if you had asked us, does it make sense for there to be a digital asset treasury built around ETH, we absolutely would say yes. Did we think that there was going to be $20 billion of capital raised in the DAT space over the ensuing 6 months? I think we probably would have said unlikely. And yet here's where we are. I think what we see and why we were early in supporting DATs and supporting the teams that were putting DATs together is that in many ways this is another access vehicle for digital assets. Obviously we've seen public market opportunities through the ETF structures. We now have 2 companies in the S&P 500, that are largely crypto companies. And so it's harder and harder for both institutional and retail investors to either ignore or sort of put the space on the side. And digital asset treasuries are an active management strategy to get access to crypto assets in regulated wrappers through public markets. And so, that's why we believe we've seen the explosion in the space. We also think we're probably coming to the end of the first phase, the genesis phase of DATs, and now entering, sort of the exciting next chapter in terms of, how the market develops and changes.
Well, you used the word explosion, which I wrote down because we're going to talk about that later, because that's what everyone's scared of. Jaime, you're a rock star. You've had a great career. You could have done anything. And you chose to become CEO.
I mean, probably
of a
couldn't have
DAT.
gone to the moon.
Now, you have extraordinary taste in directors, but outside of that, why did you choose to do this? And we're reaching a point pretty soon where saying that you're working for a DAT in New York City is like saying you work in real estate in Dubai, right? Everybody's doing it. Why are you different?
We're different for a lot of reasons. If I think back to when I first became a public company CEO in the space, it was when I took over Hut 8 back in 2020, and Hut was actually the first public company to hold Bitcoin on balance sheet. And that was always a really core kind of part of our strategy. We were one of the first mining companies to say we were long Bitcoin and we were going to hold our Bitcoin and we were not going to even sell production, which we did in a position we took in 2021. And at that time, what we offered to the market in 2021, 22, miners were the only way for a more traditional investor to get exposure to the space through an equity. So the Bitcoin miners almost acted as a proxy for a Bitcoin investment for people that didn't want to worry about a wallet. They didn't want to dabble in online crypto. They just wanted exposure to the vehicle, and we acted as a proxy. So when I think about where we are now in DAT 1.0, I actually think our company ReserveOne has started DAT 2.0. This is the next evolution of giving investors that equity exposure to the space, but in a more direct, more sophisticated manner. And when we set out to build ReserveOne, it was very much with that in mind, thinking about what does the new crypto-curious investor want as far as exposure to our industry in the form of an equity. So we created the only diversified digital asset treasury company, really inspired by what we were seeing change in the federal government. So 80% of our allocation is expected to be to Bitcoin, kind of mirroring the strategic Bitcoin reserve. 20% will be to an alternative portfolio, really inspired by what the Fed has signaled they intend to maintain in the digital asset stockpile. And then we are going to actively generate returns from the assets while we hold them on our balance sheet. And we also have embedded the ability for us to allocate up to 10% of our AUM into private deals, into venture opportunities. So really providing access to investors in one equity that's managed by vintage participants, not to age us, professionals that have been around public markets a long time. Our board of directors is expected to include Wilbur Ross, former Commerce Secretary, Chin Chu, employee number 5 at Blackstone. So really an intersection of individuals with a long history in public markets, Wall Street, Washington, and really giving that new investor access to the entire upgrade of the financial system in an equity.
Patrick, do you like the diversified DAT model?
I do.
You do? Like it better than the... Charlie Munger once said, why would I put money into my 10th best idea? Just playing devil's advocate. I believe in diversification, obviously. But why? Pros and cons of both.
I mean, well, technically, I could also buy 5 different DATs with that hold each individual token. So I think it really depends. I mean, this is an active management strategy as opposed to an ETF, which is a passive strategy where it just basically buys when you buy and it sells the asset when you sell it. And so if I believe in the manager and the spokesperson for the company, then I have more confidence to invest there. And as, for example, I'm an early investor in Bitmine, which is the largest holder of Ethereum now. Mm-hmm. They went from 0 Ethereum and 192 Bitcoin to 2.5 million Ethereum and 92 Bitcoin on the balance sheet and about $15 billion market cap in 3 months. So that's an actively management strategy that went from $4 per share of ETH in July to $40 of ETH per share in October, which an ETF cannot do. An ETF can just buy $5 of ETH and then, so it's a different strategy. And so I think it's, so that's why I like DATs. And then say if Jaime is running it, I'll probably invest in the basket as well, because I trust that she is a very experienced operator. But
Thank you,
there's
Patrick.
also operators in the market right now that don't know how to run public companies, and there might be M&A opportunities, I think, going forward.
So Scott, in a second, I'm going to ask you about the ETF DAT conundrum, if you will, but Sher, would you diversify your treasury into alternative crypto?
Certainly, and we did that, right? So even though we've historically just been a Bitcoin mining company, that's been the core business, we did go into a very big Solana position as well, and we continue to hold it. But I think I do want to come back to just one of the points that Patrick made, and I think that's a very clear distinction. I think what we've seen with all the DATs, and I wouldn't say all the DATs, but a lot of the DATs that did come up, I think it was more of an opportunistic move as opposed to an actively managed, thought-through strategy. And not to take a dig at anyone, we've seen hotel companies converting into DATs, right? So I think what's the key thing is that it's an actively managed process. There is risk management in place, and the diversification is not being done for the sake of diversification. It's done at the back of assets which really offer true value proposition to investors. So I think that's the key thing, and I think that's where going forward you'll see that DATs that are able to make that distinction and add that value will survive the test of time. That's how we feel about it.
But I want to dig in on this. So you chose to expand to Solana. Can you kind of walk me through how, why, what internally, what was that thinking?
Like, why are you mad at ETH?
Why do you hate Doge?
No, look, again, I think it's, we've had a vertical within the business that has been looking at all the new sort of propositions out there. Mm-hmm. And our view was, and that's not to say that we don't believe in ETH. We in fact, at one point in time, did have a good position in ETH as well. But we just feel that Solana is very promising. And our view is that it has just started. And I think actually this morning, I think perhaps in Hong Kong, we've seen a Solana ETF being approved as well. So I think it's just one of those investments we feel quite strongly about. We feel, and we got in at the right time. This goes back more than 2 years ago, and we're staying put so far.
Okay. So Scott, I do want to ask you about ETFs versus DATs, but something Sher just said made me think of a question, and I'm going to bear with me. I'm going to formulate it as I'm thinking through it. I think you and I share a common background in having a long career in traditional finance and hedge funds. Everything I was ever taught from kindergarten through HBS was principle of shareholder value was companies should do what they're good at doing. And they shouldn't, for example, I don't want my company that makes widgets playing around with its treasury. That's not what they're there for. This is a fundamentally different way of thinking about that. Right?
Maybe. And I think it gets back to the question of what is a DAT, right? And at the end of the day, many of these structures have come to market because there were existing operating businesses, right? Corporate entities and publicly listed shares that basically were taken over, so to speak, right? And with a strategy shift now, in many cases, those core businesses haven't been hugely successful, right? There was an opportunity to take that vehicle and that shareholding base, reposition the strategy of the company, right, around an actively managed digital asset treasury. And in some cases, those core businesses will unwind and go away. And in some cases, those core businesses will live alongside a much more significant activity on the digital asset treasury side. And so I think it remains to be seen. I think, what Jaime said and what Patrick echoed is really, I think, what is going to separate the DATs that we see today from the DATs that will be successful in the future, which is who are the management teams behind these companies? What is their vision for the role of the digital asset treasury in terms of the core activity to create shareholder value, increase MNAV, increase tokens per share? And to some degree, it's going to be tough to have it both ways. Our DAT, which is HSDT, the Solana company, was a medical device company. That company had been around for a while, had some success, but ultimately, convinced the management that transitioning that strategy to a digital asset treasury company and really telling the story of Solana was a better alternative for shareholders and ultimately for the team. I think one of the things that Patrick also highlighted here is what the role that digital asset treasury companies play in the ecosystems of these protocols and these chains. Historically, what you have is you have the foundations and you have the labs. The foundations manage the treasuries of these protocols. The labs are there to encourage developers and to encourage activity and apps on chain. But to some degree, they sort of need to be neutral in the marketplace. DATs actually can be very vocal advocates for the story around the underlying assets, whether it's Bitcoin, whether it's Solana, whether it's ETH. And so to some degree, DATs become the third leg of the stool in terms of how these ecosystems can operate, both privately through tokens and publicly in listed securities.
That's interesting. So DATs is sort of evangelical vehicles for...
If you're a manager of a DAT, you have to be a cheerleader for the underlying token. You have to believe in the story and the narrative.
So, Jaime, I want to get to you on this question of what's going to happen in the future. You reminded me, Scott, and we talked about this before the panel. I wish I would have thought of this because it's brilliant, but I think it was Matt from Ava Labs. I saw an interview with him the other day where he said that Berkshire Hathaway is a stock asset treasury firm because all he's doing is he owns single-digit number of public company stocks that anyone can buy. But for 30 years or so, we've trusted him to manage them better than everybody else, and he trades at a huge premium. His MNAV is high. Jaime, your background, you're a turnaround expert, right? That's your history. Are you sort of licking your lips at what's going to happen over the next year and a half, 2 years, as we, the common consensus? There's a fringe element I think that believes this whole thing's going to blow up. We'll talk about that in a second. I think the thoughtful people say, well, these are mostly equity-driven plays, so it's not so much a blow-up as a consolidation frenzy. Is that what you see happening?
Yeah, I don't see it as a blow up at all, and I know Patrick's passionate about this, so I'll let him talk about why it's not likely to blow up. And as a public company CEO, I obviously can't give forward-looking statements, but if you look at my past, I tend to enjoy opportunities for consolidation. I think this space is going to be ripe for some of those opportunities. I like having a setup where we're diversified, so there's lots of optionality as we think about opportunities that may present themselves in this space, and I'm excited.
Okay, Patrick, what do you say to somebody who says this is just a ticking time bomb, there'll be a violent unwinding, and Bitcoin's going to crash down to 30K?
So I would say the true DATs that basically will buy and hold and ideally never sell, if they're set up correctly, that's what they're going to do. There might be some that if they're taking on leverage, that's probably not a good idea because they might have to unwind, but I think that's the minority at the moment. I think also what Scott mentioned, the evangelism around the token, which is very important because as a public company CEO, you're not allowed to tell people to buy your share, but you can tell them to buy Bitcoin or Ethereum or Solana. And so you can actually promote the underlying assets in a way that is beneficial for your shareholders. So that's an interesting sort of twist of the story. That's, I think, why Michael Saylor was so successful with MicroStrategy, because he never says buy strategy, buy Bitcoin, right? And then people buy strategy anyhow. So it's I think it's a great opportunity also to bring fresh capital into the crypto space that we all love, and that's what we all need. We need fresh capital to come in, and then over time, I think the whole space is going to convert into the TradFi space. It's going to be all running on digital rails, and then then we're going to have some holdouts, some pirates that don't want to convert.
I think we are bringing new investors in with these new vehicles.
I was just going to
yeah,
say, I think the new capital and the fresh capital is really one of the core stories here. Just for a data point, over the 13 years that Pantera has been around, we have 2,600 LPs. On average, $1 million is the check size. HSDT, which we launched in September, right, has been around for a month and a half. Has over 200,000 shareholders. The average ticket size is $2,200. And so it really makes access to digital assets much more democratized, and the whole DAT ecosystem, regardless of whether we think that phase one is sort of over here, has certainly accomplished broadening out both the knowledge base of digital assets and the ownership base in a really significant way. And that opens the door now to more participation in things like DeFi and other digital products.
I'll remind everyone that I can't speak for here or in Europe, but in the US, it's only extremely recently, like the last couple of weeks, where we're starting to see the unlock of money center banks and big broker platforms like Morgan Stanley and others allowing their salespeople to sell this stuff. And if any of you know any of these guys and women, they like to sell, and they're really, really good at selling, and they need lots of product to sell, because a golf round lasts 6 hours, and you can't run out of ideas in the first 3 holes. So I think there's lots of room for these products, because we're going to have tens of thousands at least, if not hundreds of thousands, of very good salespeople running around selling product. Sher.
I think
5 year. Sorry.
Please.
No,
I
had a
think
question,
I
but I'm just the moderator. Please, go ahead.
No. So, no, I think I pretty much mirror what's been said. Although I do think that we see a lot of leverage play in this as well, which is where I think the nervousness arises from. Now, it may be that it's a small minority, but those are quite significant minorities that are doing it. So I think as long as it's done through appropriate risk management. And again, I'd reiterate, as I said before, as long as there's clear strategy in terms of what you're offering, I think you will. I do expect to see consolidation going forward. Yeah, you're going to have a lot of money, institutional, pouring into it, and we're already seeing that. Look, this is a nascent space, right? It's evolved very, very quickly. So I think what's key here is to understand that there are players out there that are quite significant, and there's a big leverage play there. So clearly there are risks in the market that are there, but that shouldn't overshadow the fact that the opportunity is tremendous.
Excellent point. It's a year and a half from now. Bitcoin's trading at $1 million. Sol is 10,000. And I'm an analyst, and I sit down, and you're going to go public, and I sit down and say, you got this monster trading business. Spin it off. Spin your two separate businesses. Spin them off. There's no way they can coexist. What do you say?
I think we're going to be even more aggressive, and we're going to look for the next best opportunity. So I don't think we intend to separate the two out.
Okay. I don't want to end on a bad note, but I do want to ask a rapid fire question, then spend the last couple of minutes asking you to comment on it. So each of you, give me a number. So as I mentioned before, DATs now currently control 5 to 10% of outstanding Bitcoin and Ethereum. Is that percentage higher or lower in 2 years? Give me a higher or lower, and I'll go back to each of you to expand on it. Patrick?
Yeah, higher.
Higher. Sher?
I think perhaps in the next 3 to 5 years it'll be higher, but perhaps not as significant.
I said 2. Respect the moderator role, Sher. Sure, you're difficult. You're my troublemaker. Higher or lower?
Higher.
Higher for Jaime, higher for Sher, you said?
Yeah.
Higher?
Higher.
Higher. Okay, everyone's higher. Okay, so now,
I wanted to qualify that statement, but yeah.
okay.
It's higher, but perhaps not as much as perhaps.
So I'll let you expand first. Go ahead. Yeah.
I think you're going to see a lot of consolidation. I think eventually what you'll see is the strongest DATs will continue to emerge. They will command a much stronger position. They'll grow in size, but I think ultimately you have to think about what value proposition the investors are being offered. And I think if you look at institutions, right, it's not just that is a venue for them to get exposure to Bitcoin or any of the digital assets. You have ETFs, you have other means to get that same exposure. And I think also once the custodians are more well established, I think you could see a lot of institutions holding these assets directly as well.
Okay, I want to see which of the three of you is the biggest bull. Put your hands up. Patrick, Jaime, Scott, put your hands up. Put your hands up.
About what?
Yeah. Lower it when I hit the number that's too high for you.
Okay.
They control 12%. They control 15. 7. Scott's down to 15. 17. 20. Patrick. All right. We'll start with Patrick, actually. Patrick, what's your number?
I think eventually digital asset treasury management will become treasury management, and every company that doesn't have it will have to buy it.
Ooh, that was a clever way out of being considered overly.
He just
bullish.
changed the definition
So
of that.
so what's going to happen is eventually.
Why
when
I'm on
Zach-
the panel, man.
So when Zach and Raha stop splitting the crypto day from the TradFi day, we'll know that every single company has a treasury function that using crypto baked in, right? That's the tell?
If you believe in Bitcoin as the ultimate asset, then everybody has to have it eventually, right?
Jaime, Scott, you want to change your answer now? That Patrick made that elegant little shift into everyone will be a crypto treasury firm in some way?
Look, if we broaden the definition of DAT to any company that holds digital assets on their balance sheet, yeah, we're going way over 20.
100%.
Yeah, totally agree. I would say the key thing, though, is for everyone to remember the average holding of crypto assets for institutions and on corporate balance sheets is 0.0%. And so, this is a much bigger story about access and exposure, and DATs as they're currently structured as sort of single-purpose vehicles or sort of multi-strat single-purpose access vehicles. From that perspective, the percentage is going to go up. If we go to Patrick's dream scenario, which I think ultimately is where we're going, then we won't be talking about DATs. We'll just be talking about treasury management, and again, much higher.
But I go back to my original point, Scott, Patrick, Jaime, Sher. Like, you're talking about a world in our lifetime that the integration of volatile assets, they're more volatile than munis and treasuries, into the average corporate treasury is a complete 180 from everything modern finance has taught us is right. You think we'll hit that in our lifetime?
Well, I heard yesterday we're going to live to 150, so we've got room.
Okay.
Yeah, listen, there's an old Wall Street saying, supply creates demand, right? And it's a little backwards, but at the end of the day, as more of these products become available, as more institutions have access and go through sort of the approval process to incorporate these in portfolios, as more brokerage networks start to proactively have these conversations with clients, when there's more ownership and deeper liquidity and more people standing there to make prices, volatility actually goes down. That's what happens to new products. And so that is the direction of travel we're headed in.
Right on time. Thank you so much, everyone. Round of applause for our wonderful panel.
Thanks, guys.